Relocating and want to know how to get pre-approved for a mortgage in Texas from out of state. Today I have mortgage expert Aaron Bush from Fairway Independent Mortgage on Zoom, and I have the 10 most frequent or most common questions for out of state people looking to get a loan or a home here in Texas. Say hi to everyone, Aaron.
Hey guys, thanks for having me, Dana. Really appreciate it.
Yeah, I'm so happy to have you here. Okay, so let's jump right in. These are the 10 most frequent questions that I get from buyers from out of state. As you know, our team, the Dana Pollard Group, specializes in helping people move from out of state to Texas. That can be first-time home buyers, that can be luxury buyers, and Aaron is my go-to, and he's helped many people make this transition because, Aaron, don't you know, like lending is like the first thing we have to line up if they're moving in from out of state.
Absolutely.
All right, so let's get right into it. The first question is, can you buy a home here in Texas with your current employer in another state?
You're going to see a recurring theme here today, and the answer is yes.
All right.
It can be complicated because if you work in, let's just say California as an example, if you work in California, we need to know in Texas that your job is going to continue. That's really the biggest thing. We can't have you coming to Texas, quitting your current job, and then we don't have an income source. So the big thing that we need to know is that the income's going to continue. So oftentimes, especially in our post-COVID days, many people are able to work remote. So all I really need is just a letter from a supervisor or an HR person that says we can that they can work remote and that the move to Texas will not impact their ability to work remote. That's kind of key. We have to know that the move will not impact their employment.
Okay,
Does that make
great.
sense?
Yes, that makes perfect sense.
Okay.
Thank you. So the second question that I have is, what do you need from the current employer? And you kind of just answered that, but is there anything else special that you need from their employer if they're going to be moving here to Texas with an employer out of state? Anything else?
No, it's a great question. I mean, typically not. What we'll do is we'll take that letter. If there's anything else we need to clarify, we may reach out directly. And of course, we would get, the client's permission to talk to their employer first. But if we need any additional clarifications, we typically reach out. There's a verification of employment form that we'll send. But again, it's pretty easy. I mean, sometimes an email will suffice. I mean, It doesn't even have to be really formal letters in some cases. The underwriting is pretty flexible on that. We just have to know that that employment's going to continue. That's the biggest thing.
Okay, great. All right, so the third question I have, Aaron, is can you buy a house in Texas if you want to keep your current business in another state? So we've had many buyers that you've helped with our team make this transition and keep businesses. So I guess the question is, can you keep it first?
Right. Yeah. And it's another yes.
Another yes.
It is a little bit more complicated because the way underwriting looks at this is the business geographically based in that your home state? So again, let's use California as an example. If a business is a retail business that's based in California, and then you're moving to Texas, the question that the underwriter is going to have is, how is this business going to continue to operate, right?
Without you there.
You might have a manager. Yeah. So you might have a manager that manages the day-to-day operations. Well, let's document that. Now, let's say you don't. Let's say there's no, you have to physically be there. Then calling your Texas home your primary residence when you're not going to physically be there may be a challenge. So maybe we restructure it as a second home. So there can be different options. We just have to really dig into your particular business to figure out how it's structured and if we could prove that that income would continue.
And this is one thing, thank you, Aaron. This is one thing that I love about Aaron is, with the Dana Pollard Group, we're all about integrity. We're all about doing the right thing, and we have high values, high standards. And so what Aaron does is he never lies. He's not going to try to sweep something under the rug, but what he does is he looks for the opportunity or the way to word something to get it approved by underwriters. And so it's not like we're lying. It's just that we are saying what's the strategy that the underwriters will accept.
Right. I always say this, the truth is our best defense, right?
Yeah.
So let's really dig into the situation. Let's present it in a reasonable way that's above board. And underwriters are they're just people. I mean,
Yeah.
sometimes we, tend to think that the underwriter is this big, scary person, but they're just people. And if we can present something that makes sense, that, fits within the guidelines, most of the time they'll go for it.
Yeah. And I always tell people you can't hide things from underwriters. Just
So true. Yeah.
share everything with your lender, with your loan officer, and they can package it in the best way possible to get your loan approved.
Absolutely. Yeah,
Yeah.
for sure. Another way that I've described this to people is, and I don't love this analogy, but it's really the best analogy, is to
Okay.
think of a loan officer and your processor kind of like your attorneys and the underwriter as a judge, right?
Okay.
So we're going to make sure we get all the information and present our case in the best way. So that's, we're not going to tell the underwriter something that we think would be really bad for the situation. But we are going to present the case in the best way using, again, like I said, the truth is our best defense. So
Okay, I love that.
I'm using a lot of judge jury analysis or analogies. I apologize for that, but it really is a good comparison.
Number 5, a question I get often is from buyers who have gotten pre-qualified in another state. They ask me, Dana, can I get pre-qualified in Texas? So Aaron, what would be your answer to that?
Another yes.
All right.
Now, it can be again, everything is a little complicated in the sense that if you're pre-approved, again, I keep using California, but if you're pre-approved in California and you're buying a primary residence, all they're concerned about is qualifying there. But qualifying in another state can have different requirements. So, for example, is from one state to another, one's community property, one may not be. So that's an issue that underwriters are really looking at. And that's something that we're looking at. Defining a house as your primary residence is another big issue. So when we define it as a primary, we're saying that you intend to move into it within 60 days. So if you're using an out-of-state lender that has already pre-qualified you in that state, their assumption is, yeah, you're going to be able to move into that house. But now we're moving 2,000 miles away. So that moving in within 60 days might have a different answer, right? So those are the big things, but more than likely, if you're qualified in another state, you will very likely be qualified in Texas. We just have to make sure we dot a few more I's and maybe cross a few more T's.
Okay, great. All right, so the 6th question I have is, if someone gets a new job in Texas, how long is it before they can qualify for a new mortgage?
Yeah, another great question. And we get this a lot. So if you are in the same line of work, let's say you have a salary job in another state, coming to Texas, and you have a salary job here. Sometimes I don't even need a paycheck stub.
Wow.
Oftentimes underwriters, we just get your job offer letter, and then we have to do a verification of employment. And salary to salary, it's really simple. It gets more complicated when we're going from let's say a salary job to now you're hourly, or bonuses or commissions or something like that. That can get a little bit more complicated. So in some answers, the answer is immediately. As soon as day one, you start the job, you're good to go. In other cases, we may need to see a month. In some cases, we might need to see 90 days or more. And it all has to do if it's variable. That's really the way to think about it. If the pay is variable, we may need to start seeing more and more of a history.
Yeah. Okay. So if it's a traditional salaried position, typically we need an offer letter from their employer, maybe a paycheck stub or two traditionally. But if it's variable income, then we may need longer. Okay.
Yeah, exactly. That's exactly.
Got it. That was good clarification for me. That was great. All right, so number 7 is, what is the maximum loan amount you can borrow in Texas?
Yeah, it's another great question, because people coming from other states, especially East Coast or West Coast, there are different loan amount limits than Texas. So in Texas, there's a couple of different loan types that we need to think about. There's conventional, which is probably the most common loan that people get. That loan amount limit is $548. So you can buy a $600,000-$700,000 house. You just have to put enough down to get to that loan limit of $548. If we're going above 548, that's going to be considered jumbo financing, which is absolutely available. Sometimes it can require at least 10% down, so that's another factor. And then we're well into the millions as far as loan amount limits. So we're in pretty good shape when we're going into that jumbo territory. It can have a different set of qualifications. Credit score requirements are higher. Debt ratio requirements can be a little bit lower. So that's another one of those situations where we really want to analyze it in depth. As far as FHA loans, which is a common loan for first-time home buyers, we're in the low 400s on that loan amount limit. So when you look at prices in Texas, it really covers the gamut of most of the properties we're going to see. So even though the loan amount limits are a little bit lower, it usually covers what most people need.
Okay, yes, that makes sense. And even though maybe the loan amounts are a little bit lower, you may be able to get more home in Texas anyway. It kind of balances out.
Right. Absolutely. Absolutely.
Yes. Next question is, can people buy a home in Texas if they already have a home in another state?
In so many cases, we'll see people that have to sell a house. And the good news is the market's pretty strong. I mean, it's incredibly competitive in Texas, right? Which is why you have to get started so early. But the market's also really strong in some other areas. So let's just say you have to sell a house. That's great. We would just notate that the loan is going to be paid off, or you're going to sell the house. So then that wouldn't be a factor in the qualifications. Now, let's say you don't want to sell the house until you've bought your house in Texas.
Right.
So what we would do there is we would qualify you with both mortgages. So that's the first, easiest, simplest way, right?
Yes.
Can you qualify with the new house and the existing mortgage? And if the answer is yes, if we run the debt ratio, we're good to go. It doesn't matter.
Yes.
If the answer is no, that's where we might have to dig into a little bit more of what's the plan with that current house. Do you plan to rent it out? Do you plan to sell it? And then we might have to make the new loan approval subject to one of those two things happening. Another option, we talk a lot about buying a house as a primary residence or a second home. So if we're buying it as a second home, then again, it's can we qualify with both? Let's say, I get this a lot, I'm going to buy the house, but I don't intend to move into it for, a year or two.
Oh, we do get that quite often, Aaron. I'm so glad you brought that up.
Yeah. So we either call that a second home and then we qualify with both loans, or maybe we call that an investment property because you're not going to be occupying it. Maybe you rent it out.
Yeah, many people do. Many people want to purchase now because they know prices are continuing to go up. They want to rent it out now. Will the underwriters consider the rental income from that, or not really?
Oh, absolutely. So if we call it an investment property, then we'll get an analysis of what typical rents are in the area, and we'll use that rental income to offset the new mortgage. So it can be easier than you think to qualify in those situations, which is really nice. There's a lot of flexibility in that. At the same time, if you truly don't intend to rent it out, we need to be careful and make sure we're structuring the loan type correctly. Maybe it's a second home and not an investment or / rental property. That's a good way to think about it. When we say investment property, we're saying rental property. Okay. One that you intend to rent out.
Okay. All right. Very good. Now, with that rental, because we do have many clients who do this, do you have to have a lease signed before the lender will consider it, or you just pulled the numbers and, hey, here's the average rent?
Yeah, it's kind of crazy, right? I don't have to have a lease agreement.
Okay.
All I have
Fantastic.
Yeah. I mean, the appraiser is going to put together what they call the fair market rent schedule. And so it's all based on your intention. And we don't have to have a signed lease, which is, again, a little crazy. But yeah, that's it.
Oh, that's fantastic. That's good news. Okay, great. All right, so we covered this briefly, but one question I get often is, how soon do I have to move into my new home in Texas?
Yeah, and that is really dependent upon what we're calling the house. In other words, if it's your primary residence, then Fannie Mae, Freddie Mac, this isn't a Dana requirement or a Fairway requirement or an Aaron Bush requirement. Fannie Mae says you have to occupy the house within 60 days of closing.
Okay.
So we have to be able to reasonably verify that you're able to move into the house within that first 2 months, essentially.
Okay.
As long as we can verify that, then you're good to go. Now, I will say that there's no home inspection police that are coming in later going,
Right.
oh, it's the 61st day and you didn't move in. But we need to try to adhere to that, essentially.
Yes.
If it's a second home doesn't have a requirement to move in within that 60-day period. A second
Okay.
home is just saying that, hey, I'm going to occupy the house sometime throughout the year. And then if it's an investment property, like we were talking about earlier, the rental situation, there's no requirement for you to move in because it's not expected that you would.
Okay. Okay. Very good. Now, it's interesting because with COVID, we did have some buyers close on a home and then put moving on pause for a couple of months. And we do
Right.
help our out of state clients. And so we would check in on the property once a week to make sure nothing has happened. If a storm had come through, then we'd make sure there's no leaks. So just know that our team is at service if that's, if something like that happens in the future, or you can't close, because you can close from out of state with a remote notary, correct?
Oh, yeah, absolutely. And that's kind of a new thing within the last year is being able to sign all of your documents remotely through a video notary, which is pretty fantastic. I mean,
It's fantastic.
you don't have to fly. You just do it in the comfort of your own home. So yeah,
Yes.
and that's a common thing where people are closing, and then again, it's going to be a little bit before they move in, and that's perfectly acceptable. It's just
Yes.
if it goes beyond 60 days, then we may need to be prepared to explain something if it ever came up later.
Yes.
But there again, like I've mentioned before, underwriters and we're reasonable. We
Yes.
understand that
Yes.
situations can happen. I think the biggest thing is if you say it's your primary and then you immediately put a for rent sign in the
Yeah.
front yard, that's a problem, right? So those
Yes.
are the situations we're trying to avoid.
Okay. Yes. Very good. Okay. Last question. And this is the biggest question that I get. It's when do I start the pre approval process? Aaron, when's the best time to start that process?
Well, we saved the best question for last, right? So,
Yes.
or towards the last. The best time to start is as soon as possible.
Hmm.
Really, that's the best time because let's say, for example, you think your situation's perfect. You've got an excellent credit score. You've got a new job lined up. The stars have aligned. But what if you apply and there's some little question that took a little while to work through, right? We want to make
Yes.
sure that all lights are green, right? And there's really three things that we're looking at when we're qualifying someone. We're looking at credit, we're looking at employment/income, and we're looking at assets. So you may be perfect in two of those areas, but what if one of those isn't exactly right? So we want to start that process as early as possible. Now, the pre-approval is good for 4 months. So this is a common question we get. Well, what happens if I'm pre-approved and I don't find a house in that first 4 months, right? Well, we simply update the pre-approval. How do we do that? We're going to probably get updated pay verifications for you after that 4 month period and maybe an updated credit report. And so to have two credit inquiries over a period of 8 months or longer is not the end of the world, right?
Mhm.
So that's the thing where I think most people hesitate because they don't want to have one or multiple credit inquiries. But it's one of those things that you have to do. And if you're concerned about it, it probably means you're in okay shape. It's always the old adage of the people that worry the most have the least to worry about,
Yeah.
right?
Right.
So, but again, the answer is let's start early. And the other thing, and Dana can attest to this, is let's say you find that perfect house that you love and you're ready to make an offer. If you don't have a pre-approval letter,
It
you
ain't
won't get it.
happening.
It's not going to happen. Houses are just selling too fast.
Yes.
So we
In
really
fact,
want to
we
be prepared.
we can't even show without a pre-qualification letter now or proof of funds, especially in the luxury homes. We can't show without proof of funds. They will ask for it every time, pre-approval every time. So we just don't even show homes without it. It's just
Yeah.
because you can't win an offer.
Right. Right. Yeah. And it's always, and we get this a lot where people go, I want to find the right house and then I'll start that process. And it's, you have to do it the other way around. You just have to. You have
That
to
would
start
be
with
okay in a buyer's market, and I still
correct.
wouldn't recommend it then, but many
Right.
would do that. Don't recommend
Right.
it.
Absolutely.
So I always say, I agree with Aaron, as soon as possible. It could be 6 months, it could even be a year out. If you're concerned about your credit or situation, or maybe you're self-employed, if you're a year out, it's not too soon, in my opinion, because what I love so much about Aaron is he will take a look at your scenario and give you recommendations on how to prepare to purchase a home versus going at it blindly, right? Or Googling on the internet. So
Right.
yeah, the moment you think you may want to move, go ahead and apply online. Even if you're 6 months or a year out, go ahead and push the link, click the link there. It's in the comments below. Get pre-qualified online and you can get connected with Aaron. Real quick, Aaron, I wanted to ask, and I don't have this on the question, is there something special about you or your company that makes you different from other lenders?
Yeah, it's a great question. The most common thing we find is especially when we're working with folks that are coming from out of state, is when you have a pre-approval, let's say from a lender that's out of state, or let's say a big bank,
Yeah,
it doesn't carry as much weight as a local lender.
that's
So,
correct.
I mean, I'd like to think there's a number of special things about me, but one of the most special things is being local, and that's a huge advantage.
Yes. Yes.
And we have a really good reputation in the industry. I mean, it's oftentimes that, you'll put in an offer on a house and I know the listing agent.
Yeah.
Well, that carries a lot of weight. So
Yes.
that agent on the other side can explain to their sellers that, hey, this guy's local and we've worked with them before.
Mm-hmm.
And when a seller's making a decision on who their buyer's going to be, yeah, the price makes a difference. There's lots of factors that go into it, but the trust that listing agent has in the deal closing is
Yes.
the
There's
most
a
important.
risk factor.
Absolutely. So as far as what we can do, being local is huge. Fairway's a national company. So though I'm local, we're national, which means that I've got a big support group behind me. Our underwriters, we've got a great group of underwriters and closers and all these things that just make for a really smooth transaction, trying to identify whatever issues may pop up early. And then that's what makes for a smooth closing, which ultimately is what these listing agents and sellers are looking for.
Yes, yes. And I don't know if Aaron would agree with this or not. However, this is what I tell my buyers is our group, we only work with the best lenders, but also we give repeat business to our lenders. And so what I like to explain to people is you can choose any lender you want. But if I don't know the lender, never have worked with them, I can't trust that they're going to close on time. I can't trust if that pre-approval is even good. And then I have to go to the listing agent and sell my lender. So I need the confidence, number one. But two, I know that when I have a client working with Aaron, that my file probably gets pushed to the top of the list of all these clients because he's going to have his repeat agents. Maybe there's a little more weight there as well. And so with a one-time lender, they are probably not going to get repeat business from me. Those files tend to get pushed to the bottom. I don't know if Aaron would agree to that or admit that, but that's kind of what I tell my buyers.
It's true. And I think again, like the biggest thing too, and you mentioned it, is we're selling to the listing agent.
We have to
right?
sell the lender to
Yeah.
the listing agent.
And we sell the financing side. So Dana will include me in the offer, and I'm picking up the phone. I'm calling that listing agent and saying, hey, you just got a contract from one of my best agents, Dana, and we've got a great client, the Smiths, that are ready to buy your house. And here's how they're qualified. They're ready to go. We can close quickly. I mean, we're laying it on thick to try to get that, offer accepted, because at the end of the day, we want to help people get into the house. And the only way we do that is to get a contract accepted.
That's right.
And that's why presentation and all this stuff really matters.
Absolutely. Absolutely. And you've worked with many agents on my team. And so you can attest they are very, very good at this, right?
Oh yeah, absolutely. Yeah. And it takes a different level of negotiating right now.
It really does.
Your part-time realtors, your realtors that, are like, hey, I've been doing this for 30 years. I mean, I'm sure they're great, but this is a totally different market that we're experiencing right now.
Really,
So it takes being bold, it takes tenacity, it takes just, really the buyer's agent, and Dana's team does this, is just putting that offer out there to make it look a little bit different. And then just looping in everybody. And so we can just sell the heck out of it. And it makes a difference.
Absolutely. All right. Well, thank you again so much, Aaron. Again, this is Aaron Bush with Fairway Independent Mortgage. If you want to get pre-approved for a mortgage, in the description below, you're going to find a link to get pre-approved for a mortgage here in Texas with Aaron. Also down below is going to be my dream home questionnaire. If you have more questions, if you need help narrowing down where to live in Texas, fill out the dream home questionnaire, and you can either schedule the Texas Tuesday Zoom call with myself or a one-on-one buyer consultation with one of my most amazing agents. So go ahead and do that and reach out if you have any questions. Aaron, can I put your email in the description below as well?
Yeah, thank you so much.
Okay, fabulous. Also, Aaron's contact information is below his email, phone number. Blow his phone up.
Yeah, anytime. Thank you so much, Dana, for having us.
All right, thank you so much, Aaron. Have a great day. All right, if you have questions that were not answered today, put them in the comments below and we will get those answered. So Dana, tell me the next step. Well, hey, let's meet on Zoom. Whether you are a year out or even need to move this month, the next step is to fill out the Dream Home Questionnaire in the link below. In the Dream Home Questionnaire, you will paint a picture for me of what you want in a dream home and in a community. And after you share your favorite snack, you will click the submit button and an email will be sent to you with a link to book a consultation call with me via Zoom. We will get to meet online and you can ask me anything you want about Texas. Then we will narrow down some great areas for you. And when you're ready, I have a team to help you find the perfect home for your family. So go ahead, don't be shy. The link is below in the description. And while you're at it, follow me on Instagram and you can get to know me a little more in a more personal way. I look forward to meeting you.